Verizon stock over 6% dividend, almost 6.5% dividend yield right now. We're on FinViz. We're screening for higher dividends with some other parameters. So I like to always look at U.S. companies. You know that. I start there, and then I selected today. We're looking obviously always for anything over 5% is the way I'm looking for these higher dividend stocks to get this account to where I'm saying, you know, can I get 10% yield, you know, as a weighted average for the yield on all the stocks that are going to be in this account. So Verizon going to help us get up there, because the thing is we want some big ones, obviously, to get over 10%, but we need some stable, safe ones. So I feel good about Verizon. If they can keep paying 66 cents per quarter, that's the dividend right now. It's $2.66 per year per share that you own. 66.5 cents per quarter they pay out. Dividends are paid quarterly. As you own the shares, you have to be holding them through the year as they pay them on the dates. So 66.5 cents a share in Verizon. They just paid that out July 10th. Can you count on that? Do we like that yield? I like that yield. So I'm looking at Verizon here. This is on monthlies. We're looking, they're just really been trending down since the 2021, end of 2021, right? 2022, basically the market, the interest rates, everything started shifting around, and they have just been beaten down. Now they kind of came off that bottom. Now, these are good things. I like to see all this. I like to see that it's down on price trend. I like to buy at a discount basically, but it's not maybe like you can see sort of making some recovery. They had a rougher time, and this year has been a little bit more of a, you know, getting back to where they're probably valued. They had good, amazing dividend yields if you were buying on the way down here, because you were getting probably over 7% or so. But this is still really solid, 6.5% if you're buying today. So I really like that. For those couple points I like to mention, you know, down on its price, solid business as far as, you know, not really gonna get replaced. This is a network across the whole country. All the cell towers, that infrastructure, again, same as when I talk about Walgreens, same as when I talked about UPS. Verizon, AT&T, they have all of the platform for everything we use on the phones now. The entire internet runs mobile off of Verizon communications and AT&T subscribers. Everyone's paying them monthly. Businesses are paying them. They got television and all the other, all communications, right? Communications is a humongous industry. So we want to have some allocation there, because, you know, the internet obviously is going to keep doing its thing. So 10-year investment horizon, where is a spot we can feel safe about it? I love the idea that I could buy Verizon, $170 billion company. They got a PE of 15 right now, 15, and they're paying 6.5%. I mean, you buy it now, the shares, I think they're gonna. So here's the thing. I'm not worried about the year's performance. I'm not really worried about their quarters right now or anything like that. Number one, I want the yield. I feel confident that they're not gonna reduce that dividend, because it's communications, and it's a lot of, like, you have to maintain the networks, right? There's always the maintenance guys, the workers out, you know, keeping things running in terms of the lines, all the phone lines, the fiber and everything to run networks. But the networks basically, you know, it's like railroad tracks. You have to build it once, and then it just, you know, trains just roll over it. So I love that as far as a cash flow business, because they're not really trying to manufacture something all the time, right? Again, back to like Tesla, they have to make a car every time. There's a cost input to that, a lot of labor to get it. There's a time, there's only, how long does it take to build a car? There's a start date and an end date to a vehicle. Verizon can just sign up a customer today in probably an hour. If you go into their store, people can probably do it online even. So as far as a business that is not going to go anywhere, we're going to keep using communications and all of the platforms that AT&T, Verizon type of businesses provide. The subscriber base alone is just recurring revenue. So this is a wonderful business to be in, especially nowadays, right? Everybody wants to be on a recurring revenue model. Every company wants a subscription model, basically. over, they don't want you to have to pay these big prices for anything. They just want to get you in, get you paying them basically for 10, 20, 30 years. Like, I've been an AT&T customer since like 20 years. Like, they were Singular Wireless when I had my first phone, and I got bought by AT&T, and I've just been with them, since the beginning. So you don't really, I know people change subscribers, but you kind of find one, and then, it's set and forget most of the time. That's great. We have long-term, lifetime customer value. They keep them in the network. If you get a family in there, you got 4 or 5 people on a line, or 4 or 5 lines from the house paying on iPhones, all for the family, everything like that. And then you got the bundling and the services and all that. So just gonna keep raking in cash. That's why I feel so good about that dividend. That's what's so important about them right here. Now, the yield is amazing too. I think 6%. That's great. I feel confident about that. But the real fun here is that to start getting that 6%, if we do this now, in 5-10 years, we know that the company itself will be worth more in the future, purely by a lot of ways you could think of it. Let's take one way. All those subscribers, all that Verizon has to do, and they do this all the time. Everybody gets these emails and these notices. Hey, your monthly price, the monthly package, whatever, will be going up on such and such a date. Boom! They just made billions of more dollars in revenue because they just changed it from $9.99 a month to $10.99 a month, or something goes from $20 to $24 or something like that. And you do this with millions of customers. So that is why I like the communications industry. I like Verizon specifically right now. AT&T, I could talk about them a different day. There's a little different things with them. I don't really, I don't dig into too much right on these videos. Just giving the broader overview for why we're looking at these, and we get into what are we really going to buy? If it's going to come down to, should it be AT&T, should it be Verizon? Maybe a little of both. Maybe you allocate 50-50 or something else like that. But we're getting into why we want solid businesses that we can rely on. That's my type of dividend company. It's nice to see some high yields. There's 9%. There's other things like that. I like longevity. I like to really forget about these sometimes. I like to just pick up the shares, know that I made a good decision, and then go off and just leave it, right? And then in a year or two, for these type of slower retirement accounts where we're not trading a lot in these. This is invest, leave it in the ground and wait, right? Very disciplined. You got to just know that you bought the right business. That's the idea. That's the main thing I'm trying to show you here is you buy the right company. If they have a missed or earnings or a quarter that the revenue wasn't whatever guidance was or what the analysts in Wall Street were expecting, the stock's gonna move. It's a big deal, right? You either buy more. Did the business materially change, or is there just some price movements in the short term because of there are 100,000 or not 100,000, sorry, I'm thinking in decimals, but a couple million off of a revenue number, or 10, 20 million off of a revenue number that's in the billions. Sometimes these misses are so close, it's almost, it's like, give me a break. What were we trying to track here? That they had to hit this number that we guided towards, and there's a price. The price can go up or down the next day based on how good that news was, and in a week, nobody, it settles back to whatever. It's always these short-term moves that day to day, they grab your attention because your money's out there and you're looking at your accounts and stuff. But this is the type of business where you don't have to think about if Verizon's going to be here in 5 years. It's so big, and everything, I don't know how many subscribers in the country or the world they might have. It's obviously significant. They have 100,000 employees, 105,000 according to FinViz. They have profit margins. They have positive everything. I'm not just scanning quick, but I don't see any big red flags. And this is the main thing here is a dividend player, and this is a solid company as far as multiple, almost 200 billion, right? Like I said, 171 billion dollar market cap. that's a very large company. Not a lot of businesses in this country are that big. And not a lot of businesses are kind of like that. You know, they're more stable, right? You could say Facebook is a couple $100 billion, right? But how much longevity do you give something like a social media business where it just changes? Who knows what we'll use in 10 years? But we will be using Verizon's network to access the social media and stuff. So that's why I'm looking at them. I'm gonna dig in further about like what we're looking for when we really commit on, like, you know, what else would I check here? Because these are just top line numbers again, and then just broad idea of like why Verizon is going to work, because the industry, right? The industry is what I like. The company is a big player. The dividend is there. I like it. So I'm going to keep looking at it, and I'll talk to you later.